Welcome to Credit Score and Card Savvy, your trusted source for understanding credit, mastering credit cards, and boosting your financial game step by step. If you're serious about improving your credit score, saving money, and becoming a credit expert in 2025, hit that subscribe button right now and turn on the notification bell, because you won't want to miss any of the advanced tips we share every single week. Subscribing is free, but the financial power you'll gain is priceless. Now, let's get into today's big question. How many credit cards should you have in 2025? 1, 2, 7? Or even more? Is there such a thing as too many credit cards? Let's break it all down. Section 1. Why this question matters in 2025. In 2025, the way credit cards affect your financial life has evolved. Credit scores are increasingly being used not just for lending decisions, but also for renting an apartment, getting a job, in some industries, setting insurance rates, even applying for utilities or cell phone plans. Your number of credit cards plays a surprisingly important role in your credit profile, especially as financial institutions continue to update risk models based on consumer behavior. Let's break this down from a professional point of view. Section 2. The 5 factors of a credit score and how card quantity affects them. Your credit score is made up of 5 main factors: payment history, 35%, credit utilization, 30%, length of credit history, 15%, new credit, 10%, credit mix, 10%. Let's look at how having more or fewer cards affects each one. Payment history. More cards mean more opportunities to show you pay on time, but also more chances to forget a payment. Example, if you have 5 cards and you always pay them on time, your payment history is going to be stronger than someone with 1 card. But if you miss one payment on just 1 card, that could tank your score. So you need discipline. Credit utilization. This is where multiple cards shine. Credit utilization is the percentage of your total available credit you're using. Example, if you have 1 card with a $1,000 limit and you spend $500, you're using 50%. If you have 5 cards with $1,000 each and you spend $500 total across them, your utilization is only 10%. Lower utilization equals better credit score. Length of credit history. The more accounts you have open and in good standing over time, the better. However, opening several cards at once can shorten your average account age, which may temporarily lower your score. Advice: space out your credit card applications. New credit. Every time you apply for a new credit card, your credit takes a small hit, 5-10 points, and lenders might see too many inquiries as a red flag. Tip: limit yourself to 1 to 2 new cards per year. Credit mix. FICO likes to see a variety of credit types: revolving credit, credit cards, installment loans, car, mortgage, student loans, etc. Having a few credit cards helps you build this mix. Section 3. How many credit cards do experts recommend? There is no perfect number that applies to everyone, but here are some professional guidelines. Beginners, 1 to 2 cards to start. Credit builders, 2 to 4 cards to improve utilization and history. Reward maximizers, 5 to 8 cards to leverage points, miles, and cashback. High credit score strategists, 7+ cards, but only if you're extremely organized. Remember, it's not about how many you have, but how well you manage them. Section 4. Real-life case studies. Case study 1. Maria, the credit rebuilder. Age, 28. Starting score, 580. Strategy: got a secured card, then added a retail card, then a student card. Result: in 14 months, raised score to 720 by making consistent payments and never maxing out her limits. Case study 2. Jason, the points hacker. Age, 35. Strategy: holds 9 cards, tracks them with an app, uses different cards for groceries, travel, gas, and online purchases to maximize points. Result: takes 2 free vacations a year with points and keeps his utilization below 10%. Case study 3. Nina, the overwhelmed beginner, opened 5 cards in 1 month thinking it would help her score. Missed payments, felt overwhelmed. Result: score dropped 70 points in 6 months. Fix: consolidated, closed 2 unused cards, set auto payments, started using just 2 cards responsibly. Section 5. Pros and cons of having multiple cards. Pros: lower overall utilization, more rewards and perks, backup options in emergencies, boosts credit mix and potential limits. Cons: more to manage, due dates, balances, higher risk of missed payments, temptation to overspend may shorten average age of credit if you open too many too fast. Tip: use tools like budgeting apps or spreadsheets to track everything. Section 6. Best practices for managing multiple cards. Automate your minimum payments. Check your accounts weekly. Set spending categories, e.g., 1 card for groceries, 1 for gas. Use less than 30% of each card's limit, preferably 10%. Don't close old accounts unless they have fees and no benefits. Review your credit report every 3 months. Section 7. What about store credit cards and subprime cards? These cards often have low limits and high APRs, but they can help build history. Use them carefully. Only open if you shop at that store often, and always pay off the balance. Section 8. Myths about credit card quantity. Myth: closing a credit card helps your score. False. It can actually hurt your utilization and shorten your history. Myth: having many cards ruins your credit. False. Only mismanagement does. Myth: you need to carry a balance to build credit. False. Paying in full is the best strategy. Section 9. Credit card strategies for 2025. Start with cards with no annual fees. Prioritize cards with cashback on necessities, gas, groceries. Consider one travel card if you fly often. Use 0% intro-April cards for planned large purchases. If disciplined, check if your bank offers pre-qualification with no hard inquiry. Section 10. Closing thoughts. The number of credit cards you should have in 2025 isn't one size fits all. It depends on your goals, habits, and financial discipline. Some people thrive with 2 cards, others manage 10 without a problem. The key is understanding how each card fits into your strategy and how well you can manage your total financial picture. Whether your goal is a higher credit score, travel rewards, cashback, or just building financial security, using credit cards wisely is one of the most powerful tools you can use. Final call to action: if you found this video helpful, please like, comment, and subscribe to Credit Score and Card Savvy. Subscribing is totally free, but it gives you front row access to our expert tips on building credit, using cards wisely, and unlocking financial freedom. Stay tuned for next week's video, where we'll cover what happens when you miss a credit card payment, and how to fix it. Thanks for watching, and see you in the next one.